Welcome to Money Matters TV. My name is Paul Mitchell. I'm Vice President with Beneficial Bank. My co-host today is David Emery with the Marshall Group. David, welcome. Good to see you.
Thank you. Well, good to see you too. Thanks for having me on.
David, you're in the financial industry.
Yes.
I understand you do a little investment advisory work.
Oh, yes.
What are your perspectives on what's been going on in the last bunch of months and what the future looks like?
Well, certainly the market has been pretty choppy. I think a lot of things are happening from the standpoint that the economy may not be as strong as people think it is. I was recently chatting with a couple of colleagues, and the two areas that we see that have some growth so far this year have been automobile sales and also the food processing side of things. A lot of the other pieces of the manufacturing side have been very sluggish from what we've seen.
What's food processing? What's included there?
Food processing, anything from processing, any type of vegetables, just kind of anything in general. So those are the two areas.
Not farm to table.
No, not so much farm to table. So I think one of the big areas, which you might also see, is with regards to real estate, from the standpoint that home, there hasn't been a really robust recovery in the home sale business, and then probably with commercial lending. What are you seeing there?
It's a very significant aspect of commercial banking because if you set aside, I'll say, commercial real estate, such as apartment buildings and shopping centers and that type of thing, let's talk about the consumer or small business.
Right.
When banks make loans, typically the bank looks to have collateral for the loan in addition to looking for a cash flow repayment source. When home values plummeted like they did, there's no equity in a home that could be pledged as collateral for a loan, whether it's a home loan, a second mortgage, or for a business loan even.
Yeah.
So when values come back, that equity is something that a bank can look to as being collateral for, say, a small business loan.
Right.
So it's coming back. I'm not sure it's 100% there, but it really took a bath. But there's some improvement there. It's a lot better than it was 2 or 3 years ago.
It's kind of a ripple effect then when the whole that whole side of things kind of goes down. It's tough to get it back up. So.
Yeah, well, people got beaten up. Confidence decreases. So when business has been picking up, businesses, whether small business or I think even large businesses, they've been prone to hold off employing, investing in new employees, maybe holding off investing in new equipment or new facilities or other resources before they, make the plunge. They really want to see not just we're profitable again, but much more than profitable. We have to do something else, make investment in order to sustain ourselves.
Yeah. So getting money out in the street then is kind of is sluggish. Then is that right? Or
it's more sluggish than banks would like to see. Actually, I mean, banks make money when they make loans. That's how they grow, and the more money they have earning interest, especially more than 0.01% interest, which is what they get if they don't put the money to use. The more they make money. So banks want to make loans, but they have to make good loans.
Right.
And good loans doesn't necessarily mean stretch loans, let alone really speculative loans.
I'm sure it's a very competitive marketplace too. Just a bunch of people, a bunch of banks, vying for a smaller piece of the puzzle. Then
that's right. The so-called best quality loans.
Right. Exactly.
But if people can do their homework, the credit is available.
Right.
And small business formation is still quite strong. There's big growth in, for example, in women entrepreneurs.
Really?
Starting businesses. Absolutely.
Wow. Yeah. That's interesting.
So there are changes in the marketplace and in the demographics, which is what makes America so strong.
Yeah. That's great.
And that's why we talk about with other things going on around the world, with China slowing down, or problems in Asia or Europe looking like it may have elements of another recession. Even
a little bit of the flu, right?
This country may not be as strong as it was in terms of growth rate and all, but I think it's the most stable and the strongest country in the world, and
absolutely,
we're proving it once again.
Yeah, stable, but I mean, and the economy is growing. It's just at a very small rate. So. Well, hopefully, next 6 to 8 months, things will get better. People will look toward the future, and things will be better overall.
A couple of the biggest sectors that's been talked about, in fact, in recent years, not just months, healthcare, energy. What are your perspectives there?
Well, healthcare certainly has that sector has done done well. And with the whole things changes in the healthcare system with the Affordable Care Act and the whole demographic aging, I think it's going to continue to do well. People are living longer and
How about all this activity in hospitals? Hospitals acquiring other hospitals, or hospitals having difficulties because they give away too much in the emergency room or things like that.
well, shoot, there certainly needs to be some changes there. I mean, the whole financial stability of that side of things. I think you're definitely going to see some changes moving forward. So, kind of jumping to your point on energy. Energy is quite the whole price of oil is going down significantly this year, and with the advent of what's happening internationally with potentially Iran, putting more, being now able to sell more oil on the market.
Wow.
I think a lot of that energy is. I don't see any upward forces on that in the near term.
I don't see the airlines decreasing prices.
No,
I don't see
that either.
UPS or FedEx. In fact, they're talking about surcharges now. Energy surcharges.
That's crazy. I don't quite understand that. Yeah.
Well, I thought you might have more insight than I
No,
have.
I don't have any more than you do.
Okay.
So,
What are you advising your clients to do these days?
I say just in general, diversification. I mean, having a very diversified portfolio that includes alternative investments to help further diversify away from the typical equities and fixed income.
Give us some examples of these alternative investments.
Some of the alternative investments, some of them have to do with actually commodities. Well, although a lot of commodity prices are down, there's also some mutual funds that look at doing some long and short strategies, which means hedging on things. Or some of the other ones, real estate.
Gold or
yeah, that's part of the
silver
commodity
yeah,
thing.
okay.
Real estate, both domestically and internationally. There's been a number of studies done showing that a portfolio that incorporates a very diverse portfolio, which incorporates alternatives, the returns are actually higher and less volatile than a typical portfolio that has both equities and fixed income. So makes sense over the long term.
Interesting.
So
Any other perspectives on what you're advising your clients on?
a lot of the clients that I've talked to have come in recently have been with this market volatility have been concerned. So we just tell them, have a plan, stay the course. Unless something's changed in the plan,
How about millennials? They've seen a different attitude from millennials versus baby boomers and Gen Xers and
millennials. A lot of the millennials seem to be right now kind of do-it-yourselfers type. So we don't see as many of them. Certainly, that's a demographic that's going to change things significantly moving forward because they're bigger than the baby boomers.
yeah.
So,
Any perspectives on interest rates and the Fed?
well, shoot, the Fed. They keep saying they're going to raise interest rates. It's got to happen. It can't go any lower. So, I think moving forward, I think certainly into next year that'll certainly happen. Based on where we are today, doesn't seem like it's happening very quickly.
And that's going to have an impact on inflation.
It'll certainly have an impact on the fixed income side of things. The bonds that are long in duration, we'll see a larger impact on downward pricing when they start raising rates, and the ones that are shorter in duration. So, just got to kind of understand that bonds aren't a completely safe place to be. You just need to understand the type of bonds that you have.
Yeah. Do you have any views on what's happening in the political presidential campaigns and races in terms of what that may have impact on the economy?
I think in general, historically, if you look back on election years, the market does do well. The market is forward looking, so I guess we're optimistic that'll happen again next year. So time will tell.
Okay.
Yeah.
How about some of the larger investment managers? Do you see any differences between them and also the impact on some of these high-speed traders on what they have on the markets?
Really don't get into that side of things as much. Our business is more setting up diversified portfolios and understanding the managers that we select from those portfolios, and benchmarking them, to their peers, things like that.
So do you think you and the average investor are still getting their fair share in the market, or is it the markets are adversely impacted by these other professional traders that they get preferential treatment? Yeah.
No, I really don't think. I think they're getting fair share. I mean, so.
You're getting your fair share.
Yeah, they're getting a fair share.
For your clients.
Yeah, that's right. Clients are, so.
Uh-huh.
So, time will tell.
Mm-hmm.
So.
Interesting.
So tell me a little bit more about commercial lending. Any changes you see on the horizon?
Well, stick to your guns. I mean, good credit. I've been lending money to businesses for a few decades.
Wow.
And it was, I call it more simple and basic when I learned, and
Right.
that's the type of lending we should be returning to.
Right.
The story makes sense. There's cash flow. People are honorable. They know their business. They deserve credit.
Right.
By getting too far out of whack, such as 100% financing of something
Right.
may sound good to a borrower, but in the long run, it's going to be hurtful for the borrower, the
Right.
bank, and the general economy.
Yeah.
So, but we can speak more of that a little later. Right now,
Sounds good.
we have a question from one of
Oh,
our viewers,
fantastic.
and I think you're the man to give it a good answer. The question is it's from Janet Norman of Marion, PA. What are some good ways to save for college costs?
Well, that's great. That is one of the areas I help clients with. Help them with college. And actually, if you go through divorce and you have a kid going to college, there's a lot of things you can do around that to reduce college costs. But regarding savings for college, and one of the big areas is using 529 savings plans. And they can be a wonderful vehicle to do so in that.
I'm not sure all our viewers know what that is. Could you give us a little description?
Certainly, yeah. What that is an account that's earmarked for college under this code of the IRS, Section 529, where money is put in after tax dollars are put in. The money grows, hopefully, and when you take it out for college, if you use them for qualified education expenses, that money comes out tax-free.
Ah, good.
So that can be a nice way to save for college. Other avenues also save for college. A lot of people don't realize, but you can use retirement accounts like IRAs and Roth IRAs. And actually, Roth IRAs are becoming pretty popular because when you take the money out of a Roth, that money can come out potentially tax-free for college because the money went in after tax dollars. And since it's used for college, there's no penalty assigned to it. So even though a lot of people say you shouldn't steal from your retirement account to pay for college, that can be also another way.
And the Roth differs from a traditional IRA in that it is after tax dollars. So the advantage is though.
The advantage is the money goes in is deposited in after tax, but then it grows tax free, and then when you take it out, the benefit of a Roth is it comes out tax free.
Okay.
Whereas
traditional IRA, you're going to pay tax.
Traditional IRA, you get a tax break putting the money in.
Okay.
But then when you take it out, you have to pay tax on it.
Okay.
So.
If you would like your question answered, this is the way to do it.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Now we're pleased to introduce our featured guest, Janet Presser, CEO of the Gabriel Group. Janice.
Institute.
Gabriel Institute.
Thank you.
Welcome to our show.
Thank you, Bob.
Hi. Good to see you.
You refer to your product, Teamability, as a technology of teaming. Where does it come from?
Well, I'm a behavioral scientist by background, and for years I wondered what's going on between people. What happens when you have teams that work great? You know, I did other things in business, and in business that's where it makes the dollars and cents difference. And so everybody that I knew in the behavioral science world was looking at things that are inside people, a personality trait, intelligence, things like that, And what I wanted to know was what was going on between people.
Mm-hmm.
Very different. You know, what you measure is what you get.
Right.
Sure.
And I was very lucky. I met another behavioral scientist back
Mm-hmm.
in 1984, and we put our heads to it, developed some technology. Took 10 years to develop that technology after a lot of years of research, and the rest is now.
How do you develop the technology? What is it? It's a software? It's a machine? What does that mean?
Well, it is actually an experience that you have. The problem was that if you just ask people in the typical ways that people measured people, you just ask them, what would you do in this situation or another? But that just tells you what they say they think they would do. You know, people don't always do what they say they're going to do or even what they think they should do. And so what we realized was we would have to elicit what we wanted to measure by putting people in a situation. So what we did was use the medium of movies, because movies are just like project teams. They have a beginning and an end. People come together, they solve a problem. It's just like business. And that was the beginning of the technology. That's the user experience. And then the magic in the back end, which is tracking everything you do, puts out reports that are then creating the business value.
So I've heard of like DISC and some of these other measures for, you know, what makes Teamability different than just going and doing a DISC or Myers-Briggs test, something like that?
All of those are asking you a series of questions, and then your answers are graded, in a way, scored, against a vast database of people who answered the same questions.
Is that subjective in some way?
Totally. Because, well, it's asking you, if I asked you, you know, Paul, would you rather sit up with a sick friend or mount a sales campaign? If you wanted the job as the salesperson, I think you would easily figure out
Well, I meant
which
your
answer you should do.
interpretation of my response. Is that subjective on your part or the
Oh,
analyzer's
no.
part?
Teamability has a deep engine, and that is the technology that took all that time to build, that is analyzing everything that is going on, specifically about three important things. First of all, think about a team not just as a bunch of people, but as a living, breathing thing, real thing. It has needs. So a team, if you have people on a team who are willing to meet the needs of that team, then that team is going to be able to reach its mission. Teams have different missions, though. A strategy team is very different than an action-oriented team, which might be a sales team in your business. And so that's one important thing, and that's about, do you really want to make meaningful contributions to something bigger than yourself? Do you really want to be on a team? Because you might not want to, and that's okay too. There's something else that you might enjoy doing. Second important thing is, in what kind of culture do you work the best? Really, what are your teaming characteristics? How do you like to interact with people? That's very different if you're, for instance, selling loans or maybe advising people on which people to deal with when they're
Or
trying to
how
get
to
loans.
invest, perhaps.
What to do to ensure your future. It's a very different kind of way of serving. And so that's the second one. The third is really about under what kind of circumstances, in terms of stress and uncertainty, do you like to do it? So for some people, they like things slow and familiar and pretty much the same all the time.
Right.
What we would agree is kind of low stress. But then there are people like me, for instance, they call us entrepreneurs, and what other people call stress and crazy and uncertainty and ambiguity, we have a different word
Love
for
it.
it. We call it fun,
Right.
excitement.
Yeah.
Oh my God, the only way to live. And so if you can just do work that aligns with these three things, you're going to be happier, you're going to be more engaged. And if you're managing these people, or you're the owner of a business, and you've got the right people who want to do it in that way, then
It's really hum.
you've got your work going to roll out, and you're likely to reach where you're trying to go.
Yeah, so so those are 3 areas that it measures, or is there?
Yeah.
That's.
So what kind of reports
Interesting.
does this technology produce?
Okay. Well, what's your need? So there are a number of them. One is a self-coaching report. It's for the individual. Maybe you're trying to decide, what should I do with my life? You know, that's very true for those college students
Absolutely.
that the parents are maybe hopefully going to be paying that
Right.
expensive tuition for.
Right.
It's really nice to know, what are you really going to be happy doing? That might be what dad and granddad and great granddad did like it used to be, but it might not be. And that really is dependent so much on you. Millennials are really picking up on this. They enjoy doing Teamability because, you know, it's not about necessarily following the rules, even though they follow their own set of rules. That's exciting. Then there are all the management advisories, which is where the business value starts to come in. So you can get a report, perhaps if you're a small business and thinking about adding somebody and debating between people, understanding how they team would add to your understanding of their experience. Maybe people who they know can be certainly important in high networking types of jobs. And so that's very useful to management advisory. Then, most important, team analysis. If you are maybe looking to get into something new, or you've got a long-standing team that you think could improve, do things better in some way, or maybe you're trying to clone them because you want to open another branch. A team analysis gives you a very deep report, not only on the people and what they can bring, but all of the synergies that you can develop with them, and perhaps some strategies if some people, you know that some people are planning to move on, or maybe you want some people to move on because they're not quite performing up to what you want. Sometimes it's a matter of recycling the same person into a different job, increasing your satisfaction and theirs.
Right.
And then the ultimate, this is the newest product, which I'm very happy about. It's called a Teamability Playbook. And it takes all of that information from the team analysis and it outputs a playbook, just like in sports, on all of the things you can do. Chip Kelly, if you're listening, you could use one too. Everything that you can do based on 2 important things. Who are you and how do you lead and manage people? You know, leadership is a team sport for me. But who are those other people and how do they team and how can you make the most out of all of this? So you and I could have, we could have 3 completely different Teamability playbooks if we manage in a very different way with the same identical people. And at the end of the day, what do you want? You want your people better, but you also want to be a better leader.
Right.
And that's so important. That's especially when you talk about all the diversity that's becoming desirable and all the people that the bank wants to make loans to. They may not lead like the last bestseller book on leadership because it's just not generic.
Wow. So the software. So it's software then, or?
It's there is an engine. You
Okay.
can call it software.
Okay.
It's an experience. You do it online.
Okay.
You do it from your laptop or your desktop or your iPad. Phone's not recommended.
Right.
And you have an experience. Takes about 45 minutes. It's fun. And you get to store in movies. What could be more fun?
So I'm clicking my
And you
answer or
get
what?
and you're clicking your,
Okay.
Hey, if you want to try it, guys, you team leaders too, whether you have employees or not, you do it every day. You team with customers. We all do. And knowing
Well,
how
that's
you
an
do
interesting
it helps
point.
you
So,
do it
so
better.
the number of team players is not significant. If it's two, you got to have more than one.
Oh, well, yes, that helps. That's an interesting question that we considered way back was the question of is this going to apply to a startup, to a large company? And you heard it here first, size doesn't matter. it doesn't make a difference because all teams need to accomplish something.
Right.
So we looked at it. We looked at Fortune 10. We looked at, you look at any time people come together. In fact, one of the interesting things is, of course, it applies to families, marriages, relationships of all kinds, business partnerships. And in the beginning, there were usually two. And it's helpful to know what's going on between the two of you so that as you grow and expand out, who do you need to bring
Right.
in? Probably not a clone of yourself.
Right.
Yeah.
So in hiring, so I can imagine, a small business might retain you and they get like a profile of what their team is right now.
Yep.
And then in order for them to grow, if they're looking for new hires, you might be able to complement what they have and fill in the gaps where they're not as strong. Is that part of it?
You're totally on board. That's part of a team analysis, which also gives you an idea of how can you attract the people who you need. Because how you actually talk to different people
Right.
that you may need, or those who you don't really want to do, it can be very specific. One of the ideas that was fundamental in the research was the idea of how do people feel respected and appreciated? Because that's what glues them to you
Right.
as employees. And it turns out that it's not generic. It's actually very different. If you align how you talk to someone with the way in which they're contributing to the team, you're going to get through to them in a much deeper way. People love to feel understood.
Oh, yeah.
They love to contribute, and they love to feel understood. Yes, it's important to pay them,
Right.
and yes, you want to have good benefits, and you want to have all that good stuff. But this is where millennials are being very vocal about this
Absolutely.
question, and they're saying, we want meaning. And some people have said, well, this is a millennial thing. No, it's not. If we don't like what we do at any age,
Right.
then we're going to be less happy in everything.
Yeah. Could you give us a couple of success stories?
Oh, okay. I've got
Brief. We
brief.
don't have,
Okay,
we don't have all day, but
So one of my favorites is a local company, Preferred Sands. They had 30% new hire turnover. You know what that costs.
Wow.
This is a wonderful, wonderful company.
that's a stand for the fracking industry.
They are sand, yeah, high
okay.
porosity
Right.
sand. I know lots about sand and about the people who are very successful here. So they made one change. They incorporated Teamability to find people who would fit. Their new hire turnover, their expensive new hire turnover, plummeted to 0. It stayed there. This is 5 years ago, a little more. And 3 years ago, they actually won an award for the use of an emerging technology for business benefits. And now today, their new hire turnover, their CEO told me somewhere around 1%.
Terrific.
And that's exciting. Here's
one more
I'll
example.
give
We
you
have time for it.
another
Okay.
one. This is a company it's a global company, and it's an Asian-owned company. They had a revolving door on the sales VP office. They promoted a woman who was the purchasing manager into that job. You would never imagine it. 5 years later, she was so successful at it, they made her COO. Opportunity can open up for everyone when you understand that it's not necessarily what you look like or any of that other stuff. It's how do you want to contribute to something bigger than
Right.
yourself?
Sounds like
Sense.
people really need to be open to change, doing things differently, not same old school. That's what I'm hearing.
Well, I've had so much fun. I'd like to offer all the listeners a chance to have their own Teamability experience. So you can contact me at the email address that's listed either in the notes here or go to the Money Matters website.
Absolutely.
That's a great note to
That's good.
end the interview with. Thank you very much,
Thank
Janice.
you.
That sounds
Thanks
terrific.
for sharing.
So thanks for joining our show today. Our next guest will be Ken Milner of the Kraut Harris PC Company. Thank you very much, and remember, your money matters.